Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 28th, 2025. I am Luna.
I am JPMorgan.
We've got U.S. market records.
Signals from the Fed, that big tech earnings report everyone watched.
And a look ahead at some really critical data. It's all drawn from your latest financial briefings covering August 27th, 2025.
Okay, so let's start with the U.S. markets. New highs again.
That's right. The S&P 500 edged up about 0.2%, hitting another all-time high. Tech shares were definitely leading that charge.
And the why behind it seems to be mostly about the Fed, isn't it? Falling Treasury yields.
Exactly. You really saw investors cheering those lower yields. It's all about growing expectations for earlier rate cuts from the Fed.
Right. Let's maybe dig into those yields a bit. The two-year Treasury yield, for example, sliding towards multi-month lows, around 3.6%. That feels important.
It really is. You know, the 2-year is often seen as the bond market's kind of direct forecast for where the Fed might be heading short term. So seeing it drop like that tells us the market's getting pretty convinced about rate cuts, maybe starting early next year.
And the 10-year yield dipped too.
It did, yeah, down to about 4.24%. It just reinforces this whole dovish sentiment, that the feeling the Fed's leaning towards easier policy.
And wasn't there a direct signal too from the Fed itself?
Yes. New York Fed President John Williams came out and basically said a September quarter-point rate cut is, quote, on the table if the data supports it.
Wow, okay. That certainly adds fuel to the fire.
Definitely amplified the market's mood.
So the bond market and Fed signals pointing one way. But then there was Nvidia. Talk about dominating headlines.
Oh, absolutely. The anticipation for their Q2 earnings was just sky high. You had options markets implying a plus or minus 6% stock move.
There's huge volatility priced in. So what actually happened? Did they meet those massive expectations?
Well, they did beat estimates. Revenue came in strong at $46.7 billion. But, and this is the interesting part, the stock actually fell about 3% in after-hours trading.
Huh. So excellent wasn't good enough.
It seems that way. The results were great, objectively, but maybe not, exponentially above consensus, as some might have hoped, given the stock's run-up.
Right. It really shows how high those valuations are, doesn't it? The bar is just incredibly high.
Precisely. It suggests maybe even good news isn't enough sometimes, and it could signal maybe a bit of a pause or rotation out of those high-flying tech names.
That makes sense. Now, zooming out a bit, while the U.S. market seemed pretty optimistic, were there other things happening globally that maybe weren't so positive?
Yeah, definitely some countercurrents. We saw trade tensions flare up again. The U.S. doubled tariffs on a lot of Indian imports, some as high as 50%.
Wow, 50%. And the Indian rupee reacted.
Sharply, it slid to a record low. That kind of move raises concerns about, broader trade protectionism, currency instability.
Not great. And Europe had its own worries.
That's right. German consumer sentiment. It took another hit. The GfK index fell to minus 23.6. Just kind of adds to those ongoing Eurozone recession worries.
So trade friction, European gloom. Any pockets of better news anywhere?
Well, maybe a small one on the energy front. U.S. crude oil inventories fell by more than expected, about 2.4 million barrels.
Okay.
That gave WTI crude a bit of a lift initially, up towards $64 a barrel. Suggests maybe U.S. fuel demand is holding up reasonably well.
So a bit of a mixed picture globally then. It feels like, despite the market highs here, the next big move really depends on inflation data, right?
Absolutely. That seems to be the critical factor everyone's waiting on now.
So what's the specific data point we should all be watching?
It's the U.S. Personal Income and Outlays report for July that's due out this Friday. And the key number inside that report is the core PCE price index.
Right, the Fed's preferred inflation gauge.
Exactly. Why it's so crucial is pretty simple. If that core PCE comes in lower than expected, well, that basically locks in the case for a Fed rate cut. Markets would likely rally further.
If it comes in hot.
Yeah, if it's a hot reading, that could seriously challenge this whole dovish outlook, this narrative that's been driving the market rally. It could definitely rattle markets that have priced in quite a bit of easing already.
Okay, so recapping quickly. We saw record highs, partly on those dovish Fed hopes. We saw Nvidia deliver great earnings, but maybe not great enough for the sky-high expectations. And we've got these global tensions sort of bubbling underneath.
That sums it up pretty well. A lot hinges on Friday.
So as we wait for that core PCE data, I guess the big question for you to ponder is, how much of this market optimism, this whole story of peak inflation is behind us, easier policy is coming, How much of that is already baked into prices?
And maybe more importantly, what does it mean for your portfolio if that comfortable narrative gets challenged by the actual numbers?
Definitely something to think about.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.